Hey everybody, this is Jim at SP500chart.com. It is July 22nd, 2013, about 4:40 Eastern Daylight Savings Time. And we're going to take a look at the chart using some time-honored techniques to try to understand these modern markets. Before we do so, I want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Oops, let me move my chart. Forgot to do that. There we go. Looking at a 5-minute chart to start with here, we came in to today looking at this as a likely, call it kind of a short-term support line, but a more important line of support is this turquoise colored line that is from our rising channel that goes back to late June and has been working very well for a full month. Let's go back to the 5-minute chart. A couple little interesting things here. I just kind of noticed this a little while ago. If we take this line, and you can see this was drawn over these two peaks, and once the S&P got over that line on Friday of last week, we thought, well, this may be a signal that the market will move on up, and it was. It didn't move up huge, but at least on the 5-minute chart, this little line signaled the market's ready to go up. I'm going to make a parallel line, and I'm going to put it back here. And we kind of had the same little setup right here. I'm going to make another parallel line and put it right there. Isn't that interesting how on 3 separate occasions over the past 4 days the S&P has rallied and then moved sideways, 2 down, but with a slope on the peaks. Then it would break out above it, and then we did the same thing here, broke out above it, and now we've done the same thing today. Now, does that mean for sure that the S&P will get over this line tomorrow and rally? No. It's just an interesting observation. But if you look at the chart and you see how close we are to this support line, and also how close we are to this support line, and the fact that we bounced twice today on our old neckline from this head and shoulders pattern back here. We extend that on out. Remember, we were talking about this over the weekend. Would this line serve as continuing resistance, or would it be less influential because that head and shoulders has already made its minimum target? And it's looking to me like it's, maybe showing signs that the latter is the case. That you can definitely expect that line to be resistance if you've broken down through it, but you haven't made your minimum target. But with that minimum target out of the way, this line appears to be fading. So we're going to make it lighter at this point. And what I would say going into tomorrow, look for this line to hold as support. Let me rephrase that. This line needs to hold as support if this is going to continue in a healthy upward trend. If this breaks by technically significant margin, which at this point would mean, with this line being at roughly 1693, I would say if this breaks and we get down to 1680, I would say that's even though that's not quite 1%, I would say that's a break that is technically significant. So if we get a break of this lower line, then this month-long upward channel would look to be in jeopardy. But if we break over this line, then I'm thinking we get up over 1700, and once the market gets up over 1700, you're liable to see let's put it this way. I think upon initial approach you'll probably see a little resistance, because 1700 is a milestone. It's never done it before. There may be people who are laying back right now and they've got it in their mind, if the S&P gets to 1700, I'm out. Or if the S&P gets to 1700, I'm going to short it. There could be people doing that, and 1700 could have that kind of a significant mental barrier. But if you get over 1700, then I think this market's probably going to head on up and get on up to test this yellow line right here, perhaps again. And we talked about what we thought would be maybe an inverted head and shoulders pattern here. And we've mentioned that if this had a right shoulder, in other words, if we had come up and tagged this line at about 1654, 1655, then made a right shoulder, then gotten above it, we would have every right to reasonably expect a move. And we've measured it before, but I'll do it again because it's fun. We would have every right to expect a move to roughly 1755. Now, we don't have the benefit of that right shoulder, but we're still above this line. And it just looks to me that like this market just wants to keep going higher. And 1755 could very well be in the picture, even though this pattern didn't complete. I really wanted it to complete. Had it completed, then I think 1755 would have been a very easy call. But it didn't complete, but we're still above this neckline, so I've got a kind of a tentative outlook that 1755 could still be in play. So for right now, going into tomorrow, again, we've got a couple of support lines here that I think are very, very close to where we're trading. So if the market is going to get into trouble and start to head down, there's probably a fairly easy exit upon the breaking of both this line and this line. So I think that may be a good signal to watch out for. But on the other hand, if we get support here and we start heading up, then I would expect a little bit of resistance upon reaching this line, as well as just that potential psychological barrier at 1700. So, friends, there's your video for the day ending July 22nd, 2013. I appreciate you taking time out of your day to watch this. Thank you for your support, and take care.